Good morning, everyone, and welcome to our Reboot Lewis County Funding webinar. It's been quite some time since we actually hosted a Reboot webinar, but we felt with so many new funding programs and opportunities coming out, we felt it would be a great time to share this information with our business community. So for those of you who don't know me, my name is Brittany Davis. I'm the Executive Director of Lewis County Economic Development, and we'll be facilitating this discussion today. So with that said, I'm happy to introduce our three panelists for this morning's seminar. First, we have Daniel Rickman with the U.S. Small Business Administration, who will be discussing the new PPP programs that have recently become available through the most recent stimulus bill and its eligibility. Second, we have Beth Gilles with the Lake Champlain, Lake George Regional Planning Board. We'll be discussing a new COVID loan fund that is not only available to businesses in the Lake George, Lake Champlain area, but also to Lewis, Jefferson, and St. Lawrence County businesses as well. And this happened from a merger back in the 80s, right, Beth? Between the St. Lawrence Regional Planning Board and the Lake George Regional Planning Board. And we just recently got reconnected with this planning board and realized that there were actually loan funds available to our small businesses here in Lewis County. And lastly, we have Cynthia Shannon with Empire State Development, who will be discussing the New York Forward Loan Fund. So we're really excited to have you guys with us this morning. Just a brief note on the agenda. We'll be hearing from Dan first, about 20 minutes from Dan, and 10 minutes each from Beth and Cynthia. And we'll wrap up the presentations by 10:50 at the very latest, and then we will open it up to any questions at the end of the webinar. We do ask that you keep your microphone on mute, and if you do have a question throughout the seminar, please feel free to leave it in the chat box, and we will be sure to answer at the end. Also, this presentation will be recorded, and it will be posted on our website and our social media pages in the future for any future reference. So without further ado, let's get started. And I would like to introduce our first panelist, Dan Rickman with the SBA. Dan, take it away.
Thanks, Brittany. So I realized you asked me for my presentation yesterday and it was not available, but I do have it now. So I wonder if you can let me share my screen. There we go. Okay. And sharing. All right. That's not the right screen. This is the right screen. All right. So does that look right to you guys?
2021 COVID-19 economic aid.
All right, perfect. Okay, so first of all, thank you guys, Brittany, for inviting us to participate so we can talk about these important programs. As you can imagine, we're getting a lot of inquiries, but directly in our office. But we truly rely on local organizations and local partners like yours to help get the word out for these programs. So we really appreciate the opportunity. So today, of course, we're going to talk a little bit about the 2021 economic aid, 2021 COVID-19 programs that were modified or created by the Economic Aid Act. So this is a fairly current presentation as of February 5th. There's a little disclaimer down there at the bottom that says, this is as of February 5th. And while this, presentation might be, certainly helpful based on the information we have now, we always suggest that you visit our website for the current guidance. So for anybody that's listening to this recording sometime in the future, go visit www.sba.gov/coronavirus. That is where you will find the source information and the authoritative information for everything we're going to talk about today. Okay, so and what we're going to talk about includes really focus on the COVID-19 funding options, Paycheck Protection Program, the Economic Injury Disaster Loan, And a couple of things created by the Economic Aid Act that included the Targeted EIDL Advance and the Shuttered Venue Operators Grant. So something, we're getting a lot of questions about is, realization from folks that this round of funding was a bit more targeted. That was indeed Congress's intent with the Economic Aid Act and the COVID, funding was available to support really the hardest hit businesses. And those in particular located in underserved segments, including women, minorities, veterans, businesses located in low-income neighborhoods. And as we kind of go through the presentation, I'll point out where SBA is implementing that guidance from Congress. So we've got I guess two different categories of funding. We've got our loan programs, and we have grant programs, which I'll admit for SBA, grant programs is something that we were not known for prior to the pandemic. This is the first time in history that SBA has direct grant funding available to small businesses as a result of the pandemic and going back to the CARES Act last April. With EIDL, it's both a loan. It could be a loan, could be a grant, depending on what you're applying for, and I'll explain a little bit more as we go through. Now, some of the top takeaways from the Paycheck Protection Program, and I think I'll focus more on the differences, rather than, I only have 20 minutes, so rather than go through, here's how you calculate a loan and kind of going through a step by step. I think folks are kind of generally aware of how the Paycheck Protection Program works at this point, but the way to think of it is the Economic Aid Act did make some key changes, okay? Largely for new PPP applicants, the program was expanded, okay? Eligibility was expanded. Methods of calculating your Paycheck Protection Program loan amount were expanded. And of course, the Economic Aid Act created the option for a second draw loan, okay? And it also kind of codified a lot of the things that evolved with the PPP program over last year. For example, the expansion of the covered period from 8 weeks to 24 weeks. That has been specifically codified. There was increases in what expenses are eligible for the PPP program. For example, folks are probably generally aware that you could use the funds for payroll, rent, mortgage interest, and utilities in last year, the first round of PPP. Now you can use it for those expenses, and the Economic Aid Act expanded that to include other operational expenditures critical to businesses' operations, such as supplier costs for contracts that were already in place prior to applying for the loan, for things like, for again, necessary expenses. So a necessary expense might be replenishing your inventory, right? That's a necessary expense. It's critical to keeping the business operational. These are the types of things that the PPP, the Economic Aid Act, expanded for PPP. It also clarified and streamlined and made better the tax treatment of PPP related expenses. Okay, the CARES Act made it so that the forgiven PPP amounts would not be treated as taxable income. However, the expenses used were not deductible, and that was based on existing IRS guidance. Economic Aid Act waived that requirement. So definitely will streamline folks' tax reporting for this year, because they don't have to determine what deductions, what they can and can't deduct. Okay. With one exception, there was a tax credit that was made available for payroll expenses with the CARES Act. that those expenses are not, you can't both deduct that, get that credit, and be able to deduct those expenses if you pay for them out of PPP funds. So just something to keep in mind. A couple other big things was increasing the threshold for the simplified forgiveness application to loans up to 150,000, which tremendously reduces the documentation that a borrower has to put in place has to submit with their forgiveness application. And SBA was instructed by Congress and the Economic Aid Act to no longer deduct EIDL advances from loan forgiveness payments, loan forgiveness amounts. And that's going to be retroactive. So, folks that maybe have already applied for and received their forgiveness and had an advance deducted, SBA will be creating procedures to return those funds to the lender, so the lender can in turn either apply those funds back to your PPP loan account, or if you've paid it off, the lender can or shall remit those funds back to you, including any interest that might have been accrued. Okay, so what is a first draw PPP loan? Okay, a first draw PPP loan, as we're now referring them, is for anybody that didn't receive a PPP loan last year prior to August 9th when the program authorization expired. Okay, as I said, loan eligibility was expanded to include additional entities, including 501c6 organizations, chambers, trade associations, etc., as well as destination marketing organizations, certain eligible news organizations, government-owned hospitals that otherwise are treated as a 501c3 but aren't a 501c3, and a bunch of other things. But again, generally expanded. Already mentioned covered expenses are expanded, as well as the covered period. Certain borrowers may request an increase to their original PPP loan amount. It's a very narrow subset of borrowers, generally people that applied for and received their PPP loans prior to additional clarification and guidance coming out about partnerships, sole proprietorship, seasonal businesses. SBA clarified and really expanded how those organizations can calculate their loan amount. And if they weren't able to benefit from that because, again, they applied after or they received their funds prior to that guidance coming out, those borrowers may request an increase. Included in that is also anybody who was approved for a larger amount by their lender, but requested a lower amount for whatever reason. Okay, I know a lot of businesses, particularly when the covered period was still 8 weeks, weren't confident they could spend the funds in 8 weeks, right? So they said, hey, lender, I need a smaller amount, and the lender obliged. That's another example. I will stress that that's pretty much the only examples, okay? There's no provisions, if you, used a different, if your application was for a lower amount and you were approved for that lower amount, there's not a provision to increase that, okay? So again, we have provided guidance to the lenders for those situations, but critically, your covered period doesn't change. So if your covered period, was 24 weeks between April 3rd and whatever, by the end of, 6 months later, that's still your covered period, okay? So even if you're eligible for this increase in funds, your covered period is still retroactive. So you still must have had eligible expenses sufficient to, be fully eligible for forgiveness to ultimately have this increased, amount forgiven, okay? I know that's kind of unwieldy, but, you don't get a new covered period with that loan increase, essentially, right? We're still looking back at your original one, Okay. Hopefully with the expansion of covered eligible expenses, that applies retroactively. This might still be a benefit to some borrowers, but if not, that's why the second draw loan does exist. Okay. So I'm happy to, kind of unpack that offline with folks if they have more questions about it. So as I shared, newly eligible, a number of new types of organizations there. Now the second draw PPP loan was the big, was certainly a major change to the PPP program. This is available for borrowers that have, previously received a PPP loan, and importantly, fully used their first PPP loan for eligible expenses prior to receiving a disbursement on a second draw loan. Okay, so that's step one of eligibility. Congress also changed the initial eligibility requirements by reducing the threshold of the size standard down to 300 employees for all applicants or less, and further added a 25% revenue reduction requirement. Additionally, Congress capped the loan amount to $2 million, or 2.5 times average monthly payroll up to $2 million. So the lesser of the two. Revenue reduction, of course, is to target businesses that Congress felt really needed the funds, particularly needed the funds. Borrowers in accommodation and food service sectors, NAICS Code 72 industries, they're considered to be particularly hard hit. Congress allowed them to calculate their maximum loan amount up to 3.5 times average monthly payroll, or up to $2 million, whichever is the lesser. Now, you'll see on the slide here that now says 2019 or 2020 payroll costs. So that was another increase or enhancement to the Paycheck Protection Program. You don't have to rely solely on 2019 payroll costs now. This might be particularly advantageous for businesses that maybe started late in 2019, didn't have a full year's worth of payroll, or started at the beginning of 2020 prior to the pandemic. This applies to first and second draw loans. So, if you, were a startup essentially prior to the pandemic, and while technically eligible for a first draw PPP loan last year, you couldn't compute one because you didn't have payroll yet. This might allow you to have a substantive first draw loan now, okay? Because you can now look at 2020 average payroll costs. So definitely a benefit to a lot of those businesses that meet that scenario. Throughout, though, the 25% reduction in gross receipts still applies. Now, there's several different methods of calculating that. Generally speaking, you can compare 2019 to 2020 annual results year over year. You can also compare like quarters in 2019 to 2020. So you kind of compute your total revenues over those quarters. If you're a startup, there's scenarios for like a startup, or if you were not fully active for all quarters in 2019, there's a scenario for that. There's a scenario where if you started on January or at the beginning of 2020, there's a scenario for that. There's multiple different ways to calculate this, and I would actually direct folks to our website, sba.gov/PPP, where we have some convenient how to calculate loan amount documents that folks can refer to, including how to calculate the gross revenue for various scenarios. On here, I already shared, you have to use the first draw or this PPP loan funds. One thing to keep in mind, I keep saying, prior to the pandemic, in terms of eligibility, in all circumstances, you still must be able to demonstrate that your business was in operation prior to February 15th, 2020 for the Paycheck Protection Program. So that has been consistent throughout the program and still exists, whether first draw or second draw PPP loans. In terms of applying, we've got a lot of different, visit our website, you can find local lenders. I recommend speaking with your current lender, but you can find lists of participating lenders on our website. So critically, just like with the first round of PPP, your lender is making the PPP loan. So we have no way to accept applications, monitor, influence applications. All loan application must go through your lender. So not really any changes to the loan terms and maturity for the program. I already mentioned for forgiveness, largely the same. Rules. You have to maintain employment and use the funds eligibly. Okay. Economic Aid Act extended the deadline for economic injury disaster loans. You cannot apply for a second economic injury disaster loan if you already received one. Okay, that's important to understand. If you requested a lower amount than you were eligible for last year, you may request a loan increase, okay, up to the amount that you were eligible for, okay? And of course, if you have not made an application yet, you may still apply for a COVID-19 EIDL loan. These loans are for working capital purposes. They're not forgivable. They are a loan. New program created by the Economic Aid Act was what is being called the Targeted EIDL Advance. You cannot apply for this program. There's limited funds available. And first priority for those funds is going to go to businesses that didn't receive or received a partial advance, and then following that group, it'll be businesses that apply after the funds ran out for an EIDL loan. Your business must be located in a low-income community and be able to demonstrate you suffered a greater than 30% economic loss over an 8-week covered period last year and have 300 or fewer employees. And again, SBA is going to reach out to those applicants to verify or essentially invite you to reapply for this information. And that has already begun. Okay. The last thing I'm going to talk about in my 30 seconds I have remaining before you cut me off is the Shuttered Venue Operators Program, or grant, that was created by the Economic Aid Act. This program is not live yet. There is a fairly helpful FAQ on our website, but generally speaking, eligible entities for the Shuttered Venue Operators grants are the folks on the list here. Okay. They must have been in operation prior to February 29th, 2020. You must not have applied for or received a PPP loan after December 27th. You will have to create a profile on sam.gov to apply. We've got resources on that we can direct you to. But I think it's important to understand that just because you have a venue does not necessarily make you eligible for this program. Your venue must the principal business activity must be one of these eligible entity types. And particularly for live venue operators and promoters, we're talking about, and if you read the Economic Aid Act, all 2,500 pages or whatever, they're talking about entities that derive the majority of their revenue from ticket sales for putting on live performances. So if you're like a sporting venue that sometimes has concerts, you may not be eligible because you're not getting 70% of your revenues from, performing arts. Okay, so it's that performance component that is critical to the eligibility for this program. More details will come out, I'm sure, but I would refer folks to the FAQ to read into a little bit more detail, or of course, try and ask me some questions after the end of this. So I'm not going to read through this chart because I didn't create it and it's confusing. Oh, I'm sorry, there's one more thing I have to mention. There are some loan subsidy payments available for eligible normal SBA loans, 7A-504 microloan borrowers. Again, not something you can apply for. This is something that you have an SBA loan. Your lender is received guidance or will receive guidance on how to process that subsidy payment, and will notify you, when SBA starts making payments on your SBA loan. Okay. And it says here, contact your lender for debt relief questions. Don't contact them yet because it's not live yet. You can, they'll probably reach out to you. But if you reach out to them now, they'll be like, we're waiting for SBA's guidance, is what they'll tell you. Okay. And with that, again, SBA.gov is the source for all this information. You can always contact our website. Ignore that email. I need to fix that. That's an error. I'll put the correct email address in the chat, but you can also call us at this website. So with that, I'll shut up for a little while and turn it back to you, Brittany.
Thanks so much, Dan.
Sure.
Lots of good information, and definitely good to have you as a resource. I know there's a lot of different programs and paths to navigate through all of this, so thank you.
That's a lot.
All right, we're going to pass on to Beth with the Lake Champlain, Lake George Regional Planning Board to talk about a brand new COVID relief fund that they are offering to businesses in our county. Take it away, Beth.
Great, thanks so much. So as Brittany mentioned, we have a COVID-19 small business recovery loan program. We were awarded a CARES Act grant, and we have $2.94 million to lend. The grant came through the Economic Development Administration. Okay. So the loan fund purposes are to alleviate sudden and severe economic dislocation, and then also promote long-term sustainability for businesses. So when our loan committee is looking at loan applications for this, they want to see, was your industry shut down? Did you have to reduce capacity? Did you have to reduce your workforce? You have to have been impacted by COVID-19, and that needs to be really clear, not just in your narrative, but shown in your financials as well. So you can apply for working capital loans or equipment and infrastructure upgrades. So things like cleaning sprayers or foggers that you had to buy or will have to buy to clean equipment. Do you want to expand your outdoor seating? Do you want to put in a ventilation system? A lot of gyms and yoga studios are having to upgrade ventilation systems. Do you want to look into an online sales platform to expand your online sales? Those are all eligible for these loan funds. So eligibility, your business must be located in one of these 8 counties, Lewis County being one of those, and it must be a for-profit business. We cannot lend to nonprofits. Ineligible uses, and this is really important, the funds can't be used to pay off existing debt. They can't be used to refinance other loans, and they can't be used to acquire a position in a business that you already don't have a position in. They can't be used for personal expenses or any kind of investments. They also can't be used for business expansions. And when we say business expansions, we mean, are you looking to create a new location for your business, or you want to, you want to create, we're not looking for creating jobs under this loan fund. This loan fund is meant to help businesses stay afloat until they can get back up on your feet, and they cannot be used for startups either. So the terms of the loans, they're $25,000 to $150,000. They're 1.9% fixed interest rate. It's an up to 7-year term. The term is determined by our loan committee when the loan is presented to them, and the first 12 months are interest only. Other information, there's no application fee due to us. You don't have to have a bank turn down letter. In our normal revolving loan fund program, that's a requirement, but it's not for this COVID-19 one. There's no cash equity requirement either. So as a business, you're not required to put any money into the project that you're presenting to us. But you do have to show repayment ability, and we are asking for sufficient collateral. And there's no closing costs, and what we mean by that is that the net loan proceeds will be adjusted at the time of closing to cover those closing costs, attorney's fees, any kind of mortgage filings if you're putting up real estate for your collateral, or UCC filings, those kinds of things. You can go to the next one. There. Our application requirements, I'm not going to read through this whole thing, but I will note a couple of things. We do ask for the previous 3 years of business tax returns. If you have not owned the business for 3 years, it will not preclude you from this funding. We're working with a couple businesses right now that took over the business in January of 2020 when everything was great. And then COVID hit, and the previous owners haven't been forthcoming with the previous tax returns, and they haven't been able to get them. So it won't preclude you from this funding. Please still contact and talk to us. We still want to talk to you about that. But we will need financial statements, business debt schedules, the usual things, and also some personal information, just so we can see that, you know, you can secure the loan should the business not be able to end up paying everything back. And definitely supporting documentation for collateral. So if it is real estate, we want to see an appraisal. And if it's equipment or anything like that, we need to see some information on the value of it. So the program deadline is May 1st, 2020, or until funds run out. To date, we have approved 3 loans totaling about almost $400,000. But we do have 2.94 million to loan. So one of the great things that we've done, and Brittany mentioned this at the beginning, we've partnered with Lewis County to help us get this program out there and even help us do some of the work for it. So we are physically located in Lake George. So Cheyenne from the IDA is going to be the Lewis County representative. So if you are a Lewis County business, and you're interested in this loan fund, please contact Cheyenne, and she'll walk you through everything. And then the way it will work is Cheyenne will help you get your application together, everything you need. It will be submitted to Jamie White at my office, and then it will go to our revolving loan fund committee. We meet via Zoom, and so we ask that you come to the meeting and just explain what you need your loan funds for, and then we take it from there.
All right, great. Thank you so much for that information. And of course, if you have direct comments, please get in touch with Beth. But like Beth said, Cheyenne in our office will be the main liaison for Lewis County businesses if you are interested in this loan fund. So definitely get in touch with us if this is something that you think you could utilize. All right, and last but not least, I'd like to introduce Cynthia Shannon with Empire State Development, and she'll be discussing the New York Forward Loan Fund.
Good morning, everyone, and thank you, Brittany, for inviting me to speak this morning. Empire State Development serves in many different capacities throughout New York State. Some of you may be familiar with Steve Hunt. He's in our regional office in the North Country. They provide assistance on programs to the businesses in the North Country. I represent the Small Business Division, and we provide assistance to small businesses throughout the state. But Steve and I work very closely together on a lot of our programs. Today, I'm going to talk about the New York Forward Loan Fund, and then I'll also discuss some of our other resources. Before I begin, I just want to mention this is a lot of information packed into a short period, so I encourage everyone to go to our esd.ny.gov website after the webinar today, and because there's a lot of information there, and there'll be a lot of information that I don't go over regarding the program, so it'll be helpful to get a fuller picture of it. And you can advance the slide, please. The New York Forward Loan Fund was created last summer. It was initially created to help businesses reopen after the shutdown, but it's continued, and we're hoping that it's helping businesses stay in business. It's a massive collaborative effort. We have private banks, charitable organizations. We have community development financial institution lenders, otherwise known as CDFIs. We have not-for-profits involved, and we have 2 state agencies, Empire State Development and New York State Homes and Community Renewal. So it's a massive collaborative effort. This program provides working capital loans up to $100,000 that are available to small businesses and not-for-profits that did not receive a PPP loan of more than $500,000, and actually that's in total, so even this round is included in that, or an economic injury disaster loan of up to $150,000. It also assists small residential landlords that have seen a loss of income. One thing that's different about this program compared to the SBA programs is this loan does have to be paid back over a 5-year period, and the first year is interest only. Just a quick overview of the process. Organizations can apply at the NewYorkLoanFund.com website, and the link is, the address is there on the bottom of the slide. We've tried to make this process as straightforward and simple as possible. There's about 16 questions, and it's really information that you probably already have and know off the top of your head. And at the end of those questions, you'll be provided with a list of the lenders that you can move forward with. It's really important that you choose one of those lenders right then and there, because your application won't be complete if you don't. And this is the only way you can apply. You can't apply directly with the lender. If you need assistance with the application, we do have organizations that can help you, and I'll go through them on the next slide. There are 5 CDFI lenders, as I mentioned. Not each lender is going to work with each type of applicant. So for small businesses, we have Pursuit, True Fund, National Development Council, and Ascendus, which used to be known as Axion East. And for not-for-profit applicants, the National Development Council and True Fund can assist you. And then for small landlords, it's the Community Preservation Corporation. Now, there's some similarities for each applicant for this program, and then there's some differences. So I'm going to go through the similarities, and then the differences can be found on the website. So I won't go through those in detail, but for all applicants, the maximum loan amount is $100,000. The loan term is 5 years, as I already mentioned. It can only be used for working capital. Refinancing is not allowed. There are no application fees, but the lenders might charge late payment fees. There are no prepayment penalties. So if you're not sure if you're going to need a loan, you can always apply and get it, and then pay it off if you don't need it. It might be helpful during this time. You also need to explain how the virus negatively impacted your operations, and you need to have been in operation for a year. The interest rate for small businesses is 3%, and small landlords is 3%, and then for not-for-profits, it's 2%. So those are the similarities, but the eligibility requirements, the documentation, the calculation of the loan amount is different for each applicant. And again, please visit my website, esd.ny.gov, for more information. So the Small Business Division also provides assistance through many different programs through our resource partners. We provide loans for working capital, acquisition of machinery and equipment, real property acquisitions, refinancing, technology upgrades, and business startups. The way you access those programs is you can go to our website, to the alternative lender directory, and it's in the Small Business Division where you'll see that information. And you can filter the lenders per your region or your county. And then you'll see the list of lenders that we work with to provide services. And also I mentioned the resource organizations. So if you needed help with the New York Ford Loan Fund application, we do have partners that we work with who provide technical assistance as well. So, and this is not in just regards to the New York Ford Loan Fund, but really if you need assistance with anything regarding your business, you can get help from our partners, and they're listed on that website as well. We also recently launched a new program. We're partnering with global e-commerce businesses, including Shopify, Square, Clearbank, Etsy, and Ritual One. And this is to help small business grow their online presence and pivot to online if they're not already. If you go to our website in that section, you'll see the individual providers listed there, and they're providing assistance and more benefits to businesses if you access them through our website. So rather than go directly to their own website, access these services through our website, and it may allow you to obtain more benefits. And also, if you needed help with your online presence, our partners can help you with those as well. So really, they'll help you with anything. So here's my email address and my phone number. If you have any questions regarding any of the programs, please don't hesitate to contact me. And thanks again, Brittany.
All right, thank you, Cynthia. Great information. All right, I will now open it up to any questions that anyone has for any of the panelists. I do see one in the chat for Dan. Concerning a second PPP draw, as a business with different focuses in the winter and summer seasons, we currently are not in need of funds as we are having a good winter. This summer, however, we will likely shutter most of our operations again until events can return. Can we simply show the decrease in revenues from our 2019 and 2020 summer in order to qualify, or will the fact that we're having a good winter disqualify us?
Yeah, so I put, it's kind of a two-parter. I put part of the answer into that. So in terms of eligibility, computing the revenue reduction, your current revenues aren't relevant. They're not part of of the application, and they're not being evaluated. You're comparing 2019 to 2020. So you can pick any like quarters, so Q1 to Q1 2019, Q1 2020, Q2 whichever works. You can't compare different quarters, but you can pick a pair of quarters, if you will, for making that calculation. So I think it was Congress's intent that quarter gives you a pretty large window to evaluate for revenues, and hopefully you can find one that works for your purposes. Or again, you can compare 2019 to 2020 in its entirety without having to break it down that granularly. Now, to the first part of your question, in terms of you maybe don't need the funds right now, summer's the busier season. I think it's important for folks to understand that your covered period starts the day you receive the funds, the PPP funds, okay? So if you can choose, not up front, but when you can essentially, anytime between 8 to 24 weeks, once you've used the funds eligibly, you can apply for forgiveness. So effectively, you can pick your covered period after the fact, where, if you get to week 10, you've used all the funds, you're ready to apply, well, that's your covered period. You don't have to wait till the end of the 24 weeks, okay? But that 24 weeks is not movable, okay? That maximum 24 weeks. So in this situation where, it might be difficult to use up all the funds, or, optimize the use of those funds, I think you can perhaps solve some of that with some cash flow forecasting, and maybe work with certainly one of our SBA funded partners like the Small Business Development Center, or your local accounting professional of choice, to help you kind of map out the use of the funds to maximize your forgiveness. There's not a requirement that you use the funds evenly, or that you use them in a particular pattern. The requirement for forgiveness is that you maintain employment and wages over your covered period. The reference period, like your starting point for your number of employees you must maintain, is based on your last previous quarter. Okay, so we're in Q1 right now, so we're looking at Q4 of 2019. And then you have to have used the funds, 60% of it for payroll, et cetera, et cetera. So that, there are probably some circumstances where it's fine if you had 5 employees last quarter and you're going to be at 20 employees by the end of your covered period. You could probably make that average work out to your advantage. Okay, so I think it's just kind of a cash flow thing, but the covered period cannot be delayed. That helps.
Thanks, Dan. Anyone have any other questions? And Dan, just a question I had. There is a lender finder tool on your website, right?
Yeah. So if you go to sba.gov/PPP, you can see that there's a couple links. There's like a mapping tool where you can just find the nearest one. PPP, participating lender. There's also a tool we call Lender Match, where you can kind of like type in your information and indicate the type of loan you want, and PPP lenders will reach out to you. So it's kind of like a matchmaking type thing.
Okay. Great. Any other questions? If not, first I would like to thank our 3 panelists for joining us today. Thank you, Dan, Cynthia, and Beth, for the great information that you've shared. And I would like to remind everyone on the call and anyone watching this recording in the future, please get in touch with us at Lewis County Economic Development, myself, Jenna, or Cheyenne, for more information on these programs. And if need be, we can connect you directly with one of these 3 panelists for more questions or answers that you may have. So with that said, thank you all for joining us today, taking time out of your busy days to be with us, and we hope that you have a great day.
Thank you, Brittany.
Everyone.
Thanks, Brittany.